We live, baby. We live, baby. Good evening to anybody that decides to pull up. It is Wednesday, no September the 11th. Me and the mentees were hanging out for our weekly Q&A session, and the topic of today's rally came up. And so I jumped on there with the rest of the gang. Well, I ain't gonna say the rest of the gang, but some other members of the gang. And I just want to talk about it. But before we get started, yeah, y'all can't see my face. I'm in here tank top Timmy, so I ain't gonna turn my camera on, but I'm sharing my screen. And before we get into it, gang, for those that's not mentees, feel free. I mean, I want you to unmute. So, who in here? Somebody give me a takeaway. Who, first of all, who was in the dinner discussion on Monday night when we talked about time is king and time and price and all of that? If you was in there, unmute and let me know if you was there. Don't be shy. Then Mike just left. What this with the long name? I can't see the long names. Who was there? Trader Mo, were you there? Who was that with the S right there? I can't see. It's like a long name. If you can see my screen, I'm hovering over your picture right now. Who is this right here? Your name long, so I can't see it. It start with an S.
Look like it say shop girl or something. Shop girl black.
Shop girl. Okay. What man? What's going on? What y'all got going on tonight? Why ain't nobody saying nothing or doing nothing? What y'all got going on? Hello, can y'all hear me? Okay, y'all can hear me. Okay. Everybody typing that they can hear me. All right. If you were on the dinner discussion, let me know. Irma, I already talked to you. For everybody else that's in here, if you were there, let me know. Yes or no. Come on.
Was it from tonight? Like
No, from Monday when we was doing the dinner discussion when I talk about
the
time is
intraday
king.
one? Oh
The
yeah, I was there. I was there.
okay, time is king. Kim said yes. Okay, interact. We interacting tonight. We interacting tonight. It, I'm gonna tell y'all like this: as far as we go, depends on how much class participation I'm getting tonight. You know, we at the sprinting stage now. We at the sprinting stage now. We ain't at the stage where everybody just sit in the back of the classroom and just try to glean. Oh, I'm the shy one in the bunch. Get out my life if you the shy one. We interacting. We interacting. All right. I'm 52. I'm a grumpy old man. So we interacting. Give me some interaction. All right, everybody okay with interaction? Everybody want to interact? Uh, you can type it or you can unmute and say it. Is everybody cool with interaction? Type one.
I'm good with it.
Type one or speak. Are we cool
I'm
with
cool with
interaction?
it. I'm cool with it. We're cool. We're cool.
Okay, everybody cool with interaction. All right. Hold on. What that's you? How was school? Say what? How was practice? some fish or something for yourself, but she said I don't know. It's something she got a plate in there, but she said something about cooking something for yourself. Alexa, turn kitchen light on. This one is this right here. This is yours. And she said something about. I thought she said you cooked some fish for yourself, but that's your plate right there. Maybe she was talking about. Did you cook some fish last night? I don't know, but that's your plate right there. You might want to text and ask about the fish thing, but yeah, that's your plate. All right, sorry about that, y'all. I'm back. Okay, so, somebody that was on there, on the live, who said they was on the live? Kashaya, you said you Lump already gave us, what we talked about. Now, somebody give me a takeaway. What did you glean from what we talked about? Just give me one thing you took away from the dinner discussion Monday night. What did you get from it? Kashaya, that was for you.
For me, when you were talking about swing trading, and you mentioned like the different how each week affects the market differently, and like depending on the day when news is happening, it like you said specifically, you said FOMC like meeting versus the minutes. There's a difference in that the meeting will have more volatility. So that, and with swing trading, it that's like one of the biggest takeaways I took. But I took notes on all of it. So
okay. So the factor of like the economic calendar affecting not only intraday stuff, but it has an effect on swing trading because you got certain events that happen on the first week of the month, the second week of the month, the third week of the month. You know what I'm saying? It's okay. All right, that's good. I saw Mike had unmuted. Was you gonna say something, Mike?
Well, I was going to say my biggest takeaway was really don't trade today because price will slide to the right.
Yeah, in front. That's more so coming up to the event the day before. So a lot of times the day before a big event, it would just like, depending on how big the event is, either the day before or a couple days before, it may just consolidate, just slide to the right, as we like to say, right? And then sometime on that day, you may get a move, and then you may get, you know what I'm saying, you may not get a move. But it's like, now, the one thing that before I say, do anybody know what I always say the one thing you want to be able to do? What's the most important thing when it comes to trading and comes to these ICT concepts or whatever you use? What's the most important thing that you should be able to do or know? Anybody take a stab at it?
Know where price is headed, where it's going.
Know where price is headed. Know where, understand direction. Know where price trying to get to, understand the draw, right? And if you know it or if you unsure of it, what do we look for to confirm it or help us come to the conclusion of it? What do we look for? Anybody? What do we look for?
Repeat the question again.
I say, if you know what the draw is, or if you unsure of the draw, either way, what do we look for in price to help us? Okay. And here to learn and share said PD array holding up in that direction. But what is PD arrays holding up? What do we call those? We are looking for specific what? Like if you're looking for if what's another word for clues, right? It's clues. Yeah, we say clues all the time, but what's another word for clue? What's the ICT term for clues?
Breadcrumbs.
Price what? Nope. Start with an S. What's the word for the term that he used? You're looking for algorithmic. You go to the bank and you're going to put your name on the dotted line.
Signatures?
Signatures.
You're looking for algorithmic signatures, right? That's the biggest takeaway I want you to have from not only the dinner discussion from Monday night, but anytime I open my mouth and talk to you about what price action is doing, you're looking for signatures, algorithmic signatures. When we started out tonight on the homework review, right? And one of the mentees was like, hey, I'm working on forming my model. And I said, look, bigger than the model is understanding what price is trying to do, understanding how to read these algorithmic signatures. That's more important than a model. If you focus super hard on making a model, you're just going to turn yourself into a pattern trader. But if you know how to read the algorithmic signatures, then you can use any model that's out there. You can use mannequin body part patterns. You can use trend line. You can use ICT concept. You can use anything you want to use, but if you understand the algorithmic signatures and where price is trying to get to, you can jump in and out, in and out, in and out. Does that mean you're going to be 100% trader? No, there's no such thing, right? That comes with risk management and controlling your downside. Now, I was going to do this earlier today, right? Because I'm a part of another community. I'm not going to say what that community is because I enjoy being in that community and don't nobody know who I am. I actually saw somebody name in that community that's part of the gang. And I said, God dog it, now I can't even post in the community because if they see me posting, they going to know who I am. So now I just got to just be in there and be like, don't post. And y'all know I like posting and talking and running my mouth, can't do nothing because I saw the person name. I'm like, oh my God, they gonna know who I am. But I just like I'm talking about I be in there, I'm in there doing homework, but it's a young dude that run the community. Good cat running. I be doing homework. I'm just in there and he be like, hey, good job on this, just coaching me just like I'm a new student. I be like, love it. But it's just a place where I can hang out with other traders and don't nobody look to me for nothing. I can just go there and relax and talk about trading and not have to worry about trying to guide anybody. It's my escape, right? But I was in there and I shared that I was like, hey, man, I ain't even know y'all was going to jump back on during lunch. Y'all in here grinding. Right. And I was like, I ain't gonna hold you. I just took a loan. You know what I'm saying? I just took a loan because it was like round lunchtime. Let me find lunchtime. It was like coming up to lunch, right? This the 11 o'clock candle. That's the 12. So this the 11 o'clock candle, right? And this the 12 o'clock candle. And they had came on because he was going to stream during lunchtime because he couldn't participate, find no setup he liked coming down because he got specific windows that he trade in and he couldn't find a setup he liked coming down. And so he was coming back to see if he can find something during lunchtime. And I said, I ain't going to hold you. I just took a loan, you know what I'm saying, coming back up to the new day opening gap, right? And it was like this new day opening gap over here from yesterday. Right. I was like, I just took me along to that new day opening gap. You know what I'm saying? I was like, so I'm good. I'm done. You know, I'm Gucci. Right. And so then after I got Lump, you remember when Mama called and I was still sitting in here in the studio? When Mama had called us, I was in here in the studio. Was you on the call then? Anyway, but I was still back because I had just finished trading and I had just jumped off the live with them.
Yeah, I was on there.
Yeah. And then so I was like, okay, I'm gonna talk to the gang about this because this is a perfect, Sammy said, confirmations. What's up, Rhonda? Rhonda, pull up in the I stay popped up in the Discord and unmute and say hey to me. I ain't heard your voice since you got back. Sammy, why you took that off? You said confirmation. You took that back. Confirmation on what? Are you behind, Sammy? Are you way behind us? Anyway, so let me see if I still got that screenshot. I shared a screenshot with y'all. I do. Boom. Look at that. All right. So for anybody who wasn't on the dinner discussion, right now, that's not that I done talked for 15 minutes. We're going to go ahead and get into it. Right. We done separated the wheat from the tail. Right. If y'all want the meat and potatoes on the thing, just share it with your friend and say, hey, skip over to about 16 minutes. That's when he actually started talking about something that's worth anything. All right. So we talked about time is king. Right. We talked about kill zones, macro windows, right? Sessions, opening ranges, stuff like that right there. We also talked about swing trading, but I'm talking about day trading stuff now because we talked about that rally up today. Did it surprise you? Rhonda, did that rally up to surprise you today? If you watch price and that rally up surprised you, put a 1 in the chat. If you watch price and it didn't surprise you, put a 2 in the chat. Right? If you didn't watch price, don't put nothing in the chat. So we talking about the New York session, right? So when is the New York session based off our little chart right here? The New York session is from 9:30 to 4, right? That's a broad span of time. I don't feel like sitting in front of my computer all that time. Okay. Then you got kill zones, right? What's the kill zones between 9:30 and 4? Right. So when I look over here, got a kill zone from 7:30 to 12. That's part of that 9:30 to 4. A kill zone from 12 to 1:30. That's part of that 9:30 to 4. And a kill zone from 1:30 to 4. That's part of that 9:30 to 4. Right. So I could pick and choose a time where I want to be in front of the chart trying to see if I can find a setup. Right. Because why? Time is king. I want to operate from the aspect of time first, right? And then once I pick out what time I'm going to be in front of the chart, then I want to start looking for what do we look for in price? We look for algorithmic what? Somebody unmute and say algorithmic what? Signatures. There you go. It should have been like a choir. It should have been like signatures. Like everybody should have just unmuted and said it at the same time. The signatures. Let's do that. Everybody unmute. On 3, we're going to say it together. Y'all ready? Everybody unmute. Ready? 1, 2, 3. Signatures. Look at that, boy. Look at that. Beautiful. He'll let us share sitting on the back pew in Bible study right now. Talk about signatures. Hey, so now that we got our time, right? So now I'm gonna come over here, right? I'm gonna go to the handy dandy. If y'all don't know about this sessions on chart, right? It's an indicator. And I like it. It's called Sessions on Chart, right? And the reason why I like it is because you can go in and you can set times that you want it to highlight for you. Yeah, it say London, New York, Tokyo, Sydney, and all that, right? But what I like to do, right now, I got the times in there when I want to be trading. If I got up and traded any of these sessions. Right, that's what I got set as my default. Okay, so, and you see right here, I'm just gonna highlight New York right now. Right, so if you notice, when I just got New York highlighted, right, you see right here, this right here. Now, during this time, this is when price was dropping. Right, so during that time, this is when price was dropping. Okay, so when price was dropping down here like this right here, I was unable to get a setup, right, during the time that I want to trade because I don't like trading prior to 10 o'clock. right? I don't like trading prior to 10 o'clock. So I got it highlighted from 9:30 to 11, right? And I don't like trading prior to 10 o'clock. And prior to 10 o'clock, I didn't get a setup that I was comfortable with taking, right? So I watched price just drop. It just dropped it like it's hot, right? So then I was looking, I ain't looking, but I'm thinking in my head about, okay, these are my kill zones, right? My kill zone is from 7:30 to 12, right? Can somebody tell what's a kill zone? What the altos were in key. What are kill zones? Kill zones are what? All right. Kill zones are times when what? Kill zones are times when the ICT concepts are what? I'm walking it through for y'all.
Is it
Likely to happen.
prevalent, or you could see?
Say it again.
You could see it. That's when they happen during the kill zones.
Not that's when it happened, but it's when it's what? Go ahead. Help ID is when it's what?
Likely to happen.
More probable to happen, right? The kill zones is when the concepts are more probable to happen, right? So I'm choosing to look from 9:30 till 11 because I don't want to be in front of the charts all day, right? Nothing gave me what I wanted from 9:30 to 11. Okay. So I say, okay, the kill zone is from 7:30 to 12. So it's still time in the kill zone for something to happen, right? You got a lunch kill zone. That's from 12 to 1:30, right? I can either stick around a little bit now and see if something happened, or wait until lunch, or wait until the afternoon. I can choose when I want to engage with the price at these times, right? So what do you notice? Let me go into replay mode, right? When I go into replay mode, and this right here is the 10 o'clock candle. This candle closed at 11 o'clock, right? This is the end of my window, right? Can somebody, we get into the rally. I'm doing this on purpose. Y'all know how I do. I try to get you to look at the price and say with your own mouth what price is doing, because when you write it down or if you say it yourself, you remember it. Me just sitting up here saying it all the time, it just starts to go one ear and out the other, right? So what do you notice? Right, let me see who I'm gonna pick. Drum roll, please. Calio, you at the top of the list. What do you notice about price at the end of this 10 o'clock hour? What did price do right here at the end of that 10 o'clock hour? Can you see my annotations? Are the annotations big enough for you? Like the writings on my annotations, are they big enough for you? You there, Calio? Calio, can you hear me? Calio ignoring me, y'all. Y'all tell Calio how I get when my feelings get hurt.
I'll help out.
Look at D. I help out. KC. No, I want people who won't ever say nothing. KC. Callie stepped away. Look at here learning shit. Talk about Callie. You turn around and pay attention in Bible study. Callie, KC. What do you notice that price did at by the end of this 10 o'clock hour? KC typing. It's fast if you just unmute and talk, KC.
Hey, Tim, I'll go, man. I'm working, my man. Sorry about that.
Oh, you working? Yeah, you good? Yeah. If you working, don't worry about it.
Now, go ahead. I got a second.
Oh, what do you notice right here? What did price do by the end of this 10 o'clock hour right here? What I got circled there? What did price do?
Took out the previous day low.
There you go. I saw that Price took out the previous day low at the end of this, by the end of this 10 o'clock hour, right? So, Kim, did we displace through that low or did we reject that low?
We reject it.
Yeah, I'd have moved on to Kim Callio. I appreciate you. Appreciate that, Kim. So now we've come to what is a prior day low, right? A prior day low is what? Kashaya. Okay, Kim, you unmuted. What's a prior day low?
It's liquidity that.
Yes, it's liquidity, but what do we call that? What do we call like a certain destination? What is that?
Picasso.
Not Picasso, but like what we're ARP, right? Say it for me, Kim. What's an ARP?
Anticipatory reactionary point.
Oh, you got to say it like me, Kim. Come on, give it to me now. Give it to me. You got.
Anticipatory reactionary point.
I love it. I love it, man. You got to make it fun, man. You got to make it fun. So, I noticed that. Hey, we just hit a ARP, right? We hit an ARP right here. An anticipatory reactionary point, right? We hit an ARP right there. Okay. So now that we hit the ARP, if we come to a low or a high and we don't displace through it, but we reject off of it, especially if it's an ARP, a higher time frame, anticipatory reactionary point, what is being implied here?
What is being implied? That is liquid. It took liquidity, and when it rejects, we go to the place that sent us there.
There you go. Did that little arrow help? You can say yeah. All right. So that is just, we're looking for algorithmic signatures. Remember, we're looking for algorithmic signatures. What's up, Lil Hope? All right. So when we rejected this low at this anticipatory reactionary point, right? Now we start. Where do we look to figure out what's going on? Like Beyonce say, we look to the left, right? Looking to the left, what do we notice about the low that we took out? Right? What can somebody tell me? What do you notice about this low that we took out? What is that?
Oh, it looks like it took out all those other lows right there.
And what do we call that? All those other lows right there. What is that?
That's a relative equal low.
Yeah, relatively equal lows.
Relative equal lows, right? So we've taken out relative equal lows. Okay. Well, that's significant, right? We took out relative equal lows. Now, not only did we take out relative equal lows, we rejected and we didn't displace through. Okay. Now that you see that we took out relative equal lows and we rejected and we didn't displace through, right? Where are we trading in the sense of the day? Right? Where are we trading in the sense of the day? We're in a discount, right? So we're in a discount in the sense of the day, right? So if you're in a discount in the sense of the day, all time frames below the day are in what? Huh? Rhonda, calling on you. If the day is in a discount, all time frames below the day are in what? A premium or discount?
They're also in a discount.
They also in a discount. So now, the day is in a discount. The time frames below you are in a discount. Now, what do we need to check? Right.
Are we going to look at the PD raise, the next one?
But in the sense of premium and discount right now, the daily and below are in discount. So what do we need to check now?
The 4 hour.
The 4 hours is less than the daily. So I'm gonna give you a pass on that. So now the day, so we gonna go up. We want to see where we are up. If we're in a discount, if the higher time frames are in a discount, you want to make like we know the lower time frames are because the daily is in a discount, and the lower time frames are inside the day. So if the day is in a discount, right, then the lower time frames are in. I don't care if it's in a premium on that time frame, they're in a discount because the day is in a discount. So I'm waiting for an opportunity to buy on those time frames if I'm a day trader. You see what I'm saying? Because it can be in a premium on the 1 minute, but if the daily is in a discount, you automatically thinking, I need for the daily to be in a discount. So I'm just going to say it's in a discount until I go down there. And if it ain't, I'm going to wait till it get in a discount and give me something to set up. Okay? Got it good. So now we're going to go up to the weekly, right? And since we go up on the weekly, you can see right there that this right here, can y'all see what that say? That says weekly equilibrium, right? Who asked me that? Irma. What does weekly equilibrium mean?
Oh, that's the halfway point. Oh man, equilibrium.
Yeah, that's it. You're right. Halfway point where? Between what?
Between the high and the low.
Yes.
For the candle, which is usually the fair value gap.
Nah, you good. You was good there. Just stop at the 50% between the highest high and the lowest low. Right? That's your equilibrium, right? So where's premium? Above equilibrium. Where's discount? Below equilibrium. So now you see, oh, the weekly is in a discount also. All right. So we're in a discount on the weekly. We're in a discount on the daily. Right. So if we're in a discount on the weekly, we're in a discount on the daily. Right. When we down here on our 60-minute chart that we was looking at. Right. So now we say we were in a discount on the weekly, we're in a discount on the daily. We just came to an anticipatory reactionary point right here on the 60-minute, right? So now I want to see, one, what did we react off of to create this rejection below this low, right? And if you look over here, do you see can y'all see anything clear on the 60-minute here, right? Can you see anything clear right here from this low coming back this way? That's just like super obvious. Like you ain't got to be ambiguous about it. Like, it might have, do you see anything clear over here? Meaning, do you see a low of a fair value gap? Do you see a right at mean threshold of an order block? Do you see the high of a breaker? Is it anything that's just super clear, like right over here that made it stop right there and then take off back up like that? Do you see anything
the
clear?
order block? The order block?
I'm saying it's an order block there, but is it clear that it's coming right to the mean threshold? Is it clear that it's coming to a low? Is it clear that it's coming, or do it just look like, okay, it's going inside the body somewhere and stopping?
Looks like it stopped in the body.
Huh?
Looks like it stopped somewhere in the body. It didn't go
Yeah,
lower.
somewhere. Yep, somewhere in the body, right? Called mean threshold is way up there. You see what I'm saying? Mm-hmm. Mean threshold way up there. If you just do it body to body, mean threshold is right there where it closed, right? All right. So if you're looking at it body to body, you can say the closure is respecting mean threshold, but what stop? See, that's what I mean by clear. See, right? It's clear that this body closed above mean threshold on with the body of the candle, the beef of the volume of the candle. Right? It's clear that it stopped right there. But when you look over here to the low, there's nothing clear that it stopped at, right? So then you want to shuffle through your time frames, start going higher to see if it's something higher intraday that stopped it there, right? So, because you're looking for algorithmic signatures, right? And look at God. Look what my what's the name is already there, right? What do you notice as we come up under these bodies right here? What's hanging out over here under all of these bodies, right? What's hanging out over here under all these bodies? What are these right here? Right? What are those?
Wicks.
Wicks, right? Wicks are what? Wicks are what? Wicks are gaps. Wicks are gaps. Whenever we're looking at price and it's coming above a high, below a low, coming up into a fair value gap, down into a fair value gap, right? When you go past a low, what's the question you ask yourself? How far can it go, right? You ask yourself, how far can it go? And when you see it come to a low, you look for the first PD array that you see when price comes, if price go past that low. Now, somebody tell me, right? One of the two PD arrays that jump out at you when price passes by that low right there. Somebody give me one of the two.
A Bessie?
A Bessie. Very good. Right? We got a Bessie right here. All right. What's the other one? Somebody else give me the other one. What did I say when I first dropped down to this time frame when I said, look at God? Do y'all remember what I said? I said, look at God. Look where my Fibonacci is already. So what's the other one? Can y'all see it? If you can't see it, just say, nah, I can't see it. But if you can see it, tell me what it is. Where's the other
Is
PD
it the
array?
main threshold of the order block? Is that what it is?
Mm-mm. It's 50% of something.
Okay.
It's 50% of something.
The wick.
The wick.
The other wick. The wick. Consequent encroachment of this wick right here. Right? So you say, how far can it go? Okay. So you have, and when you're looking at wicks, when it comes to how far can you go past a high, how far can you go past a fair value gap, how far can you go past a low, you want to look at the wick that dug the farthest. If it's going down, it's the wick that's got the lowest low. If it's going up, it's the wick that's got the highest high. I don't care if it's 2, 3, 4 wicks next to each other. You're looking at the one that digs the deepest, the one that does the most damage. Okay? Get it? Got it? Good. So we come past the low, right? We hit the consequent encroachment of the wick, and then we stop right there. Right? The high of the Bessie is, put this here first. The high of the Bessie is 18.546.75. The low of that candle is 18.547. That means we did not touch that 4-hour Bessie. Right? We did not touch the 4-hour Bessie. So what 4-hour PD array did price engage with to push us away? Because if you were waiting at this Bessie right here, you did not get picked up unless you front ran it. If you was waiting at the high of the Bessie, you did not get picked up because your price did not print. Right? You did not get an institutional order flow entry drill. So what PD array did we react off of? We reacted off consequent encroachment of that wick right there. Okay. Now, let's put us a little circly circle around this right here. Right? Consequent encroachment of that wick. All right. So we go back down to 60 minutes. Right? So we're at 60 minutes, and now we got our information, if you will, of what stopped price. Or if that's not good enough for you, we can continue to go down. You can go down in price, right? Let's go down to 15 minutes. Let me put a line here so I know where the low is. Oh no, it's right at the high of that, so I don't need to do that. One tick above the high of that, right? So if I go to 15 minutes, right, you can continue to go through. That's good enough for me because I got higher time frame information, so I'm happy with that. All right, so I come to 15 minutes, right? Nothing uber clear on the 15-minute time frame, right? I go to 5 minutes, right? I like to base it off of the higher time. If I find something on a higher time frame, I'm Gucci, right? On the 5 minute, I'm below consequent encroachment of that. Right? You can, if you want to use that, like, hey, we came down into that fair value gap, right? But then there's another fair value gap below it. So, you know what I'm saying? And it's inside the higher time frame fair value gap. That's why I like to go with the higher time frames. And then if you go down to 1 minute, go to that same area over there and look at it. And we can see that we come all the way to the low of a 1 minute fair value gap right there, right here at a bullish breaker. So we come to the low of the fair value gap. That's pretty precise or spot on, right? But I still like using the higher time frame information, like the 4 hour consequent encroachment of that wick, and failing to touch that high, and then going back up and respecting that order block that Kashai was talking about, right? So so I like those for the reasoning. All right, so we was on an hour, so we will drop down to a 5 minute time frame. Right, so dropping down to a 5 minute time frame, you can see that I had information in here. So I'm kind of giving away I'm kind of giving away some information here because y'all can see my annotations on the screen. You know what I'm saying? So, you know, I guess I'll go ahead and put some meat on the bone since I already got my information up there. But before I do that, right? Let's go back to 60 minutes, right? So going back to 60 minutes, right? Now that we got our higher time frame 4 hour information, we failed to hit the PD array, right? We respected consequent encroachment of the wick, and we respect mean threshold of the order block, right? Our mean threshold of the order block was like right there. Okay. So we respect the mean threshold of the order block, and we got a rejection. So now, since we got the rejection, we're anticipating price wanting to draw back towards the high that sent us there, right? So now we look and say, hey, what's in between here that can maybe stop price, right? That can maybe stop price. Now, what sticks out? Somebody unmute and tell me what sticks out in this area here that could be, 1, a roadblock, 2, a draw on liquidity, because we're down here in the discount. And if you're in a discount, you're looking for price to go up. So if you're going up, that can be your draw if you get long down here. Now, if you're long and you're anticipating price to draw back towards that high up there, what can be a roadblock over here? Somebody unmute and tell me some stuff that you see there. Make this bigger. And if you don't know what this gray thing is right here, this is a new day opening gap. Right. What do y'all see up there as potential roadblocks or draws?
Would it be a new day opening gap?
That's one. New day opening gap, right? That's a draw. Who else? Somebody else give me something else.
The order block?
Order block. Yep. Order block. Somebody else give me something else.
Inversion fair value gap.
Inversion fair value gap. Somebody give me something else. Breaker. Right? We're going crazy. One more thing that's not a PDU rate, but it's important because remember what we're talking about, right? Right. What else? One more thing. Right. What we talking about right here?
Time?
Time, yes. So what do y'all see up there?
What is 12 o'clock?
What's another term for 12 o'clock?
At lunchtime?
No. Not that 12 o'clock. I'm giving you credit for nothing. What? Not at 12 o'clock.
Midnight open.
Midnight open. Right. There you go. Time is king, right? Midnight open. Okay. Now that we understand we're in a discount, now that we understand that we got 4-hour PD, we got daily anticipatory reactionary points and 4-hour anticipatory reactionary points. Now we're looking for signatures that want to take us back up there, right? So when we wicked below this low, right, and then we closed back up there, right, on this hourly time frame, what PD array did we leave behind? All right, look close. Look close. What PD array did we leave behind? Right there. On this hourly time frame. Right? We came to this daily low. Right?
The wick?
Yes.
CE of the wick?
CE of the wick. Right? So we left CE of the wick right there. Right? That's now our discount PD, and we left a low. So we got CD of the wick, CE of the wick, and this low, right? These are our discount PD arrays, right? That we want to now go down in time and see how we react off of these PD arrays, right? So this, let's move this over to the close of the candle. Right there. So now we want to see, remember, we got our 4-hour consequent encroachment there, and now we have our hourly consequent encroachment here, right? So now these are the discount PD arrays that we are watching to see if they want to support price, right? And because I did not erase my my analysis from today, right, you can see other information that I'll go ahead and put the meat on the bone now and finish out these. Now you see on that 5-minute counter there, let me go back once more. All right. Okay, so that right there was the close. Okay, and let me move this over. Right. Matter of fact, let me go to a one. No, I don't want to go to 1 minute chart yet because I got some stuff over there. But move forward once. All right. See how we came down to that consequent encroachment of that wick right there? Right. We came to the consequent encroachment of that wick and we rejected back off. Right. Not only did we come to consequent encroachment of that wick and reject off, what else did we possibly do? What signature is looking like it's gonna rear its pretty little head to support our thesis? Right? We came down to this consequent encroachment of our hourly wick, right? Not structure. What signature is looking like it may play out, but we still need the verification of one, no more than two more candles. I'm giving y'all a million clues now, right? When we came down here to this consequent encroachment, close to that consequent encroachment, and wick back up like that, what signature is looking like it may play out, but we still need the verification of one, no more than two 5-minute candles, because we're on the 5-minute time frame right now.
Change in state of delivery.
Nope, not changing state of delivery.
Swing low.
Nope,
Is it an inversion for value?
Inversion fair value gap?
nope.
The
It's,
reversal.
Close above.
this wick came down here, right? And then it went all the way back up here. What signature is looking like it's about to play out in this area right here, but we still need the verification of one, no more than two more 5-minute candles to let us know that, yes, that did just happen.
The reversal.
No.
Price range.
This
Need
wick,
to go in that little green box. Do you have the fair value gap?
don't worry about that. But this ain't here yet, right? This ain't here yet. This wick, what is this wick doing?
Repricing.
It's
It repriced.
It's a algorithmic signature, right? And it's a strong algorithmic signature that lets you know that you're on the right side and price is about to go.
Repricing. It got repriced.
It's not an order block?
This wick right here is doing it. This wick is doing it, right? Okay, look this way, right? And then tell me what this wick is doing. And then whatever this wick did, you still need the verification. Put something in front of that what you just typed. Can y'all see what Here to Learn and Share just typed? It's one word that go in front of that.
Balance price range.
Balance price range.
No.
No. Oh.
Can y'all see what she typed? Immediate rebalance. Immediate rebalance. This candle here closed all the way up there. This candle here high is right there. There's a possibility to make a BISI right there. Whenever you get a candle that trades back down into that wick, if the next candle at no more than two candles get gone immediately, that lets you know that that was an immediate rebalance. And an immediate rebalance lets you know that the algorithm ain't interested in coming back. So it immediately rebalanced that because it don't want to leave a fair value gap, trade away, and then come back to reprice that fair value gap. So you get an immediate rebalance, meaning you offer the sell side delivery in this case, and then you leave the area. And you want to leave the area with some force, because when you offer buy side and sell side and you leave the area, what does that indicate? It's now a balanced price range. So it's an immediate rebalance. Okay? Signatures. We looking for algorithmic signatures, right? So with the next 5-minute candle, right now, we got our signature of an immediate rebalance, right? We got the immediate rebalance there. So now we got this algorithmic signature of we respected our consequent encroachment of our discount PD array. Remember, this was our 60-minute discount PD array. So we came down, respected that, right? Then we got the immediate rebalance, right? So there's 1, 2 algorithmic signatures letting you know that you're on. It's showing you, okay, yes, I want to continue up, right? I'm showing signs that I want to continue up, right? But for my trading style, I don't have the confirmation where I'm comfortable enough to enter yet. right? For some people, right? For some people, this candle right here closing below this daily low, and then this candle, like this little indecision candle, forget him, right? Then we come up here and we engulf this candle. For some people, that right there, right, would be all the change in state of delivery that they need, and will enter in on that change of state and delivery to try to get long, right? There's nothing wrong. That, do y'all remember what I talked about? This was like the model that I was testing out for my turtle soup. When I get the candle that closed below the low, and then we get an engulf, the next candle engulf it, and then trade that as a trade, change the state of delivery and go up. That's the model right there. Now, so we go up there, and as you see from my annotations that I forgot to remove, we get a BISI right here, and we get a 5-minute change in the state of delivery right there. Okay, so with this 5-minute candle here, right, we get a BISI there, and we get a 5-minute change in state of delivery. So as soon as we trade above this now order block, because we've traded above the highest down close candle that came down here and took out liquidity, right? We've traded above the highest down close candle. So now this is our 5-minute order block. So now I'm immediately going into the 1 minute to see how the 1 minute price action reacts off of this 5-minute order block. And then if you notice here from my annotations that I still never moved, we create another fair value gap right here. So let me go ahead and put another 5-minute candle on there, right? But I'm in the 1 minute chart now when this is happening. Okay, so we got us a change in the state of delivery, and we got a 5-minute fair value gap right there. Now, question for you, right? Looking at the this 5-minute fair value gap right here, right? What type of third candle does this 5-minute fair value gap have? Remember in the fair value gap video? What type of third candle?
Third candle? Oh, that is a big strong candle, like it wants to go to, yeah, expansion, like
expansion.
It wants to run through. Yeah.
Expansion candle. Okay, so this BISI has an expansion third candle, and then we create another BISI right there. So now that we created that BISI there, what do we assume, or what do we what's the probability, what kind of gap? Breakaway gap, right? Now this is a breakaway gap because we created this BISI, and then we immediately created another BISI because we had this expansion candle. So now that's a breakaway gap. So now that we have this breakaway gap, what else do we have right here? Right? What else do we have right there?
Balanced price range?
Balanced price range. And okay, you said it like it was a question. So now explain to me why that's a balanced price range.
Balanced price range.
It's too late. Explain to me why. Good job, 80. Balanced price. Oh, I ain't even see. Will said immediate rebalance. I couldn't see the YouTube chat, Will. My bad. And Nicholas, no, not double bottom. I don't trade 880. Stop answering questions. D, what makes that a balanced price range? You said it like it was a question.
Price
So
delivered down and price delivered back up, and we're getting
I'm just joking,
displacement.
80. You good? Okay, so we had efficient delivery. We got buy side delivery, right? We got buy side delivery here, right? And we got we got sell side delivery here, and we got buy side delivery here, right? So now we got efficient delivery there, and this candle right here, we're leaving this area right there, right? This candle here traded above it, giving us an order block. The order block is created, and then the next candle, we're leaving this area. right? We're leaving this area. So now we have a balanced price range. We have a breakaway gap, right? And we now have a BISI that's right here at the change in the state of delivery, right? On the 5-minute time frame, right? So watching the 1-minute time frame, right? Coming to the 1-minute time frame, and then y'all can see my through the magic of me not removing my information, you can see where the trade setup was taken. I trade over in Ninja Trader, and since this is just not the gang that's a part of this, I could care less if you think I actually traded this or not. I really don't care. But here we are on the 1 minute. So on the 1 minute time frame, right? Remember, we're looking at because I told you you're watching it from when this, let me see what 5-minute candle. Let's find the 5 when this 5-minute candle right here closed, right? So we're watching it, everything to the left of that. All right, so now I go to the 1 minute, right? So right here is when we start watching on the 1 minute time frame. Okay, so while we're watching price do all of this right here, before this 5-minute BISI gets created right there, before this is created, right? Before this is created, we're looking to see what happened on the 1 minute, right? And what do we see on the 1 minute? We had us a 1 minute breaking market structure, right? One could argue that this right here was the 1 minute breaking market structure, but for me, this is the 1 minute breaking market structure because that's the full move after this consolidation right there, right? This right here was, a part of this move down, in my opinion, right? So we had this consolidation and then we dropped like that, right? So breaking market structure right there, like I say, one can argue that being the breaking market structure. Remember when I talked about the change in the state of delivery for like more aggressive traders, right? So if you like one of those people that trade like that, let's put a line there, go back to the 1 minute right there. You can see here, once let me go back to the 5 minute. Let me get the right time. We're going to put this over here because that's when that candle closed. Now go back to the 1 minute right there. When this candle came down, you would have been picked up inside your trade right there on this 11 o'clock candle when it came down into the 5 minute change in the state of delivery right there. That's when you would have been picked up. And then it created a 1 minute fair value gap, traded down into a 1 minute volume imbalance right there, right? And then now you can see on this lower time frame why price overshot the 60-minute consequent encroachment, right? There was a 1 minute volume imbalance right here, came all the way to the low of that 1 minute volume imbalance, right? You can see it came all the way to the low of the volume imbalance right there. And then price immediately wicked back up. And then we came down again, dropped down one more time, right? And closed there. And then the next candle, we pushed up and created a breakaway gap right here. Yeah, the breakaway gap there because we created that BISI with an expansion candle. And then we continued up, right? So now you got a 1 minute breakaway gap there, okay? And then we're over here, right here. You got the 1 minute breakaway gap here. It's not a breakaway gap yet, but when this 5 minute candle starts, we come up here like that. And now we know we got a 1 minute breakaway gap there. I didn't mark that out, right? We got a break in market structure right there, right? Once we got up here, right? Once we got up here, we got us a, we got to move this back over here to the 10 minute candle there. No, we were here. Yes, right there. Right there, because we was dilly-dallying right there, right? So once we got up here on this 106 candle, right, we got a inversion fair value gap, right? Because once we came over here, for anybody who would have entered in on the change of state of delivery down there. You got some low hanging fruit right here as a high right there, right? You got a high right there. You could have trimmed something there. Okay, we close above the consequent encroachment of this bearish fair value gap right there. Then the very next candle goes up to the low of this. We poke into it, but we close right at the low of this bearish fair value gap, creating an inversion fair value gap right there, right? And then this candle here pushes up. We trade back down into this BISI right there. Okay, we trade into that BISI right there. I don't have that marked out. Why? Because I didn't start watching it till over here, right? So I'm not worried about marking out that BISI because I already got the 5-minute fair value gap marked out. Okay, and then once we trade back up coming out of this BISI right here, we trade back up, and that's when we get our change in the state of delivery on this 1113 candle right there. So now we got the 5-minute change in the state of delivery there, and with the 5-minute change in the state of delivery, we have a BISI right here. Right, we got a BISI right there. You say, Tim, why don't you have? Can somebody tell me why I don't have that BISI marked out right there? Right, why didn't I mark out that BISI right there? Why did I mark out this BISI?
Because it's in premium.
Because it's in the premium. Yes, this BISI is in the premium. So now I'm looking for an opportunity to get in. Right, why am I looking for an opportunity to get in? I'm on my 1-minute chart. It's done all of the work that I need to do, because now I'm down here hunting a entry now. I'm looking for an entry now, right? So I'm looking for a reason to get in. So I'm not going to waste my time marking out that fair value gap because it's in the premium. And what are we doing right here? We're engineering liquidity up here. We're up here engineering liquidity, right? I want to see that. So now I want to see us have a short-term raid of liquidity, right? I want to see us raid this liquidity here, but I want to come to an area that makes sense for me to enter, right? And if I'm looking for an area that makes sense for me to enter, I'm looking at this range right here, right? So looking at that range there, this is in the premium and this is in the discount, right? So I got a 1-minute fair value gap right here that's in the discount, right? It's aligning with a inversion fair value gap right here. Okay. It's aligning with a inversion fair value gap here. It's aligning with a bullish order block right here. Okay. And we've already traded off of this BISI and moved up. So I'm not anticipating this low being taken out because it's sitting right there on the 5-minute breakaway gap. This low right here is what created this fair value gap, and then the closure up here is what let us know that this was a breakaway gap. So if this is a breakaway gap, right, remember we're talking signatures, right? This is a breakaway gap, right? A BG, this is a BG, then that low should be safe. Okay, if that low should be safe, if I get in at this fair value gap right here, right? If I get in at that fair value gap right there, I have a order block right here, right? This is mean threshold of that order block, right? We got this breakaway gap right there. I mean, this inversion fair value gap right there. And we got this inversion fair value gap right here, right? This is a lot of traffic for price to come through when this area right here, the algorithmic signatures are saying it's safe and you need not to worry, right? So that's why you see right here, I'm looking to enter at the high of this fair value gap, and my stop is just below mean threshold of this order block right here. Because why? What's the order block's job? Somebody unmute and tell me what the order block job is and say it just like I be saying it too. Say it just. Say it again. Can't hear you.
Block price.
You got to say it like I said. You got to say it with your chest.
Block.
There you go. His job is to block price. It's going to block price, right? So if his job to block price, we don't want to see it hit what? We don't want to see it make it to what? Irma, we don't want to see it make it to what?
The that 50%.
Yes. And in this case, 50% would be mean threshold because it's a block. 50%. 50% of a block is mean threshold. You're right, 50%. 50% of an imbalance is consequent encroachment, right? And 50% of a range is equilibrium. So you don't want it to get to that 50%. Like if you can't remember them names, just remember. You don't want it to get to that 50%. You don't want it to close below or above that 50%. You want it to hit, like just barely hit it, hit 25%, get it gone. Okay? And then now we see here, once this candle closes, right? Once this candle closes, we now have a 5-minute fair value gap right here, right? We got a 5-minute fair value gap right here. It's in the premium, right? The 1-minute fair value gap right there is in the premium, right? So we want to see price come down to the discount and give us an opportunity to move, right? And this is what I was talking about when I was like on the lower time frame, it can be in a premium on the lower time frame, but we want to see it move to some type of discount so that we can participate, because the higher time frame is in the discount of the move. So we're looking for the lower time frame to give us a buying opportunity in the discount. Everybody got that? Get it, got it, good, right? And then we put more meat on the bone, and then we see that, right, I done went too far, right? We see that the target was hit right here on the 1137 candle. And if y'all remember when I was like I'm in another community, I was like, hey, I just took a loan back to the new day opening gap, right? And remember when I said what are some draws on liquidity? Right there, boom, there's your draw on liquidity, right there. For the new day opening gap, there's your draw on liquidity for the midnight price. We had like an order block over here somewhere. We had a breaker over here somewhere. We had a inversion fair value gap over here somewhere. And as y'all know, price just kept going. So all of those points, and look how price came back to that new day opening gap. Did y'all see that? Came back to that new day opening gap beautifully, right? And let me do this right here. So let's go back up. You say, Tim, I don't trade the 1 minute. I don't do all that right there, right? If we go back up, 15 minute, that's too high. Right there, 5-minute time frame, right? 5-minute time frame right here. Look at the 5-minute chart. See all my annotations from the 5-minute chart right there. There's our 5-minute Bessie right there, right? We traded down, came into that 5-minute Bessie, right? Let me move the drawing out the way right there. Right, you say, Tim, I don't do all that low time frame stuff. Sure, tell me on that. Right, 5-minute time frame right here. Get out the way. Right, 5-minute time frame. Come up, pushed up. That fair value gap that gave us our breakaway gap. Right, change in state of delivery. Trade back down into the fair value gap. It overshot it. Right, we know why it overshot it. We know what it came down to on the 1-minute time frame. Right, got inside the one more time, open here, closed above the fair value gap, pulled down, did not touch it. Right, displaced away, created another fair value gap right there. If you did not take it here on this fair value gap and on the change in state of delivery, there's your second opportunity to get in right there, because your draw on liquidity, right? Remember, that was the high that sent us there, right? So the high that sent us there, right, was the potential draw. We have gotten through everything that was a potential roadblock, right? Remember everything. We got the new day opening gap right there. That was a potential roadblock. We got Sibby's over here. That was a potential roadblock. We got Breaker over here, potential roadblock. You know what I'm saying? We got a lot of stuff that's potential roadblocks, and we've pushed through all of that by the time we get here. Closed above, right? The consequent encroachment of this daily fair value gap right there. Traded back down into this BSC. Right, where do we trade to? This new day opening gap right there. Used it as support perfectly. Rejected back up. Right, boom. Right, and in the sense of this move right here, right there, came down to a discount. Where's your discount PD rate? Right, part of this fair value gap and that new day opening gap right there. This inversion fair value gap right there. Wick down, respected it all. So if you missed that 5-minute entry, there's another 5-minute entry. There's your draw on liquidity, and it went well beyond that. Right? Draw on liquidity hit. Right? And you continued up for the rest of the day. Right? And it's all based off of the algorithmic signatures. Right? It's easy to see it in hindsight, right? It's easy to look at it in hindsight, but as you see, right, based off of what I had going on the charts when I came in here, as you can see, this is what I sat down and did today, right? This is what I sat down and did today, because the only thing I've added to this chart since we've been on here is this line right here and this right there. I had a couple little lines that I put on there. This 4-hour fair value gap. Now I didn't have that on there. Right there. Right. This where we was at when we came in. Right. That's where we was at when we came in right there. Besides, I know I put that on there too. Right. That's where we was at when we came in. So it's like you want to train yourself to be able to see these signatures in real time. And then what do we always say? If price does what?
We do this.
If price does this, then it what?
Does this.
Yes. If price does this, then it should do that. If price does this, then it should do that. If price does this, okay. Walk me through it, Tim. All right, price came down to an anticipatory reactionary point and then rejected off and closed here, right? Since price did that, if price does this, then it should respect this discount PD rate and continue up, right? It respect the discount PD rate and continued up. Price gave me a break in market structure right there. Since price gave me a break in market structure, right, and a fair value gap, since price did this, it should respect this fair value gap and continue up. Price did this, it respect the fair value gap and went up. We took out another high, gave us a 5-minute change in the state of delivery. If price take out that high and give me a 5-minute change in state of delivery, it should respect that and continue up. Price did this, and then it did that, right? If price does this, then it should do that. If price does this, then it should do that. If price does this, then it should do that. If price does this, then it should do that. If price does this, then it should do that, right? Because why? We came down here to external liquidity. We came back up to external liquidity, right? So if price was if we wanted price to continue down because we didn't hit an anticipatory reactionary point, we would want price go to external to internal back to external. But since we hit an anticipatory reactionary point, right, we want price to go from external back to external right here. If price goes back to external, right, if price comes back to external, it should go to internal and then go back to external, right? So price came down to external, went back to external, came back to internal, and then went back to external, right? If price does this, then it should do that, right? So it's not about what entry model did he use right here. Did he use that order block? Did he use that fair value gap? Did he use that mitigation block? Did he use that reclaimed order block? Did he use that fair value gap? Did he use that change state of delivery? Did he see a unicorn? Did he see? If price does this, then it should do that. I yield my time. Does anyone have anything for me? Did anybody get anything out of this?
Yes, I did. Thank you. This is it really helped now for my going through my price action.
I'm glad to hear that. D, did that clear up anything you was about to say about price when you was like, hey, it just kept running through stuff? Did that clear up anything?
Yes, and it takes practice to hold, or if you have multiple contracts, then taking some off or adding some on at different areas.
All right. So based off everything we just said, now that you're in your position and you got 4 contracts and you want to okay, just say, right, let's just say you got in right here, right? And then and let's say you got in right here and your stop was down here below the fair value gap right there, right? And you said, okay, I'm going to trim some off right there. When I'm gonna take one contract off there at that high, right? What about price action in here would tell you it's okay to move your stop, and where would you put it? Right? What about in price action right there would tell you it's okay to move your stop, and where would you put it? Based off of if price do this, then it should do that.
When it moved to the next level, you can move the stop up to where you circle.
Where's your next level?
Then
you shave some off here, right? As soon as we go through that, so when price right there, right, you just took one contract off right here, right? Mm-hmm. So when are you moving it from here to there right now?
Yes.
Okay, that sounds like a question.
Yes.
Okay, so you're moving your stop just below that low
when
right
it
there.
When it leaves the area, move it up.
All right. Why are you moving your stop here, and why do you feel like your stop is safe right there?
Because it's a breakaway gap.
Okay. A breakaway gap right there. Okay, we got a breakaway gap right here. That's the only reason, because we got a breakaway gap there.
Well, price is respecting that bottom fair value gap. The candles wick down. The bodies.
You talking about the 5 minute right here?
Yeah, the bodies did not go down.
Okay, we're respecting that, right?
Yes.
Okay, we're respecting that.
And then we moved away.
Okay, we moved away.
Yes.
Okay. So you put it there because it respect that and it moved away.
Yeah. And then there's an order block there, another change in state of delivery. I mean, yeah, like there's an order block there.
Okay. All right. So what you saying is you got 1, 2, 3, 4. You got 4 PD arrays price has to go through to get back to that stop. Right. And how many PD arrays does Michael say need to fail before you? Yes. So now you got 4 PD arrays that's in between you and where price is. When I say you, meaning your stop. So now you say, okay, I can comfortably put my stop here. Price should not come back here, because if price does this, meaning take out that high, I trimmed some, because whenever we break a high or low, there's a possibility of a reverse. But since we haven't reached our draw on liquidity, if price does this, meaning break that high, create imbalances, it should do this, meaning coming back to the imbalances, respecting the order block, right? You already have a small breakaway gap, and then do that, right? So now I feel safe. Put in my stop right there. All right. Stop is safe there. All right. So we're coming up. Got another high right there. We get it. Boom. Right. So you've come. You've come more than 50% away. I mean, you've come more than 50% of the range of your overall target. Because remember, if this low didn't take, the target is potentially the high that sent you there. You've come more than 50% of that range. So now you've taken off 2 more contracts because you had 4, and now you're leaving 1 as a runner, right? Do you want to move your stop, or do you want to leave your stop there? And if so, where are you moving it to?
Let's see. That looks like all balanced at the new day opening gap.
Below the new day opening gap?
Yes.
Okay.
Because it's balanced. When it went through, it looks like it's a balanced price range right there.
Okay. So you're saying you got a balanced price range here. Price left it. Okay. So you got a BPR right there. Right. And then you got a new day opening gap right there. And so you're anticipating the new day opening gap to be used as support and price not get back to the balanced price range. And you also got a breakaway gap here. Okay.
And prices continually producing fair value gaps. Like fair value gaps are creating more fair value gaps.
Okay. All right. So now and I would say that is a smart place to put it, right? Why? Because this fair value gap and this new day opening gap, these are your discount PD arrays that can be potential buying opportunities, right? These are the PD arrays that you don't want to see price get to, because like you said, this is a balanced price range and price is exceedingly bullish. So you don't want to see a lot of opportunity of deep retracements, right? So there you go. Price does this, then do that, right? And in this case, right, you would have been correct, and your last runner would have held on until the target, right? Even if you want to, that's the target there. Even if you want to move it again, once we formed a new structure, even if you want to move it up again, it would have been, the last runner would have been good until the target. But you just want to get used to moving your stop based off of if price does this, then it should do that. Me personally, I tend to trail my stops tight because I don't like being in trades for a long time, right? So if it's not running to my target, I'm locking in profit and I'm trying to get up from the computer. That's just my trading style, right? And plus, you know, when you're trading with prop firms, you got this whole consistency thing. So I really can't afford to have like a really big day, right?
And one thing that lunchtime, like goes, like it was going up, and then lunchtime it comes back and retraces and to go back up.
Yes, it did. All right. So when we got here to like after 11:30, like the London closes 11:30. So after 11:30, right, we come here. After 11:30, we came up here, right? And once we started going into like the 11:30 to 1:30 time frame, we got us a pullback, and then we pushed up, and then once we got into lunchtime, we just kind of consolidated, and then you know, from after lunch, we just kind of continued. We just kind of continued up. You know, we just kind of continued up. Today was like a classic trend day to the upside, but you can still see those algorithmic signatures that's in there, right? Because lunchtime really, you can really like look at it from like around 11:30ish, but it's actually like 12 to 1:30, right? So if you look around from 12 over to 1:30 over here, right, go to 12 to 1:30 right there, right? So today when you get into lunchtime, right, we've already came down, and now we're going like into like, we're like expanding away. So in the sense of, right, in the sense of what price is doing, right? So we came here, if we look at it in the sense of price delivery, right? So we came here, and we can look at all of this right here, right? We can look at all of this right here. This is our CPI print right here, right? This is CPI right there. So before CPI, we can look at all of this right here as consolidation, right? This is our CPI. All of that is consolidation. So we got, right, we got our consolidation, right? We consolidated, right? We went up here, right? And we came back down there, right? And while we was coming down here, right, we got our manipulation there, right? We had a little retracement there. We had a little retracement there. Then we came down here and delivered there, right? So we had our had our consolidation, manipulation. Then we came down here and we distributed below these lows, right? We get below the low and we distribute the positions, right? How do you know we distribute the positions? Because we accumulating down here, right? So now that we accumulating down here, right, we accumulating there, and then we're starting to expand, retrace, and then we go up here and deliver up there, right? Even though it's a trend day, so we got like several areas where we're like retracing, but that right there is our main. If you look, this right here, we got the consolidation, we got the expansion, and then we got the retrace. That's our main retracement right there. Everything else is just like a quick little bump, right? That's the first time we really got a pullback, and then the rest of it was the same thing, right? It was just like a continuation, going up, going up, going up. So, right, consolidation, expansion, retracement, and then deliver right there, right? So that's looking at it on both sides. Accumulation, manipulation, came down here to the distribution, right? Consolidation, expansion, reverse, retrace. Well, this is a small retracement, and deliver, right? All different ways, and just knowing like where you are in like the sense of the price, right? Looking at it from a market maker standpoint, right? You're on the right side of the curve, right? You're on the right side of the curve in a discount, so you're looking for reasons to buy. Every time you get a reason to buy, boom, till you hit your target right there, right? It's giving you opportunities there. Got our smart money reversal down here, low risk buy, another accumulation, reaccumulation, then hit your target, right? Whichever way you want to look at it, all the concepts right there, just knowing what to look for. Make sense?
Yes.
Y'all good? Anybody got anything? Where we at? An hour and 34 minutes? Anybody got anything?
No.
Oakley Dokley. Oakley Dokley. I appreciate y'all for hanging out with me, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Aranya Grande, aka Big Spider. Y'all be safe out here in these trading streets.